Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index climbed above the 99 level before the weekend, reaching its highest point in nearly 5 weeks and heading for a weekly gain of more than 1.4%. The move was supported by rising inflation pressure, which strengthened expectations that the Federal Reserve may raise rates later this year. Stronger core retail sales also pointed to resilient domestic demand, while geopolitical uncertainty and higher energy prices boosted safe haven flows into the dollar. WTI crude rose more than 3% before the weekend, trading close to $101 per barrel and posting a weekly gain of around 10%. The rally was driven by ongoing supply concerns as the Strait of Hormuz effectively remained closed and tanker traffic stayed extremely limited. Oil prices remained volatile, with WTI briefly falling to $95.5 before rebounding sharply back toward $101. Gold fell to around $4,511 on Friday and was on track for a weekly decline of about 3.77%. The main pressure came from accelerating US inflation, which raised concerns that the Federal Reserve may keep rates higher for longer or even consider another rate hike. Although gold is usually seen as an inflation hedge, higher interest rates increase the opportunity cost of holding the metal. Traders are now watching the outcome of US-China discussions and the actual shipping situation in the Strait of Hormuz. If tensions ease, gold may face further downside. The yen weakened to around 158.7 before the weekend, heading for a weekly loss of more than 1%. The move was driven by broad dollar strength, rising US inflation, and growing expectations that the Fed may raise rates later this year. Higher oil prices also weighed on the yen, as Japan relies heavily on imported energy. With the pair moving back toward earlier intervention zones, markets are increasingly watching whether Tokyo may step in again to support the currency. The euro fell below 1.165 last week, reaching its lowest level since early April and heading for a weekly loss of more than 1% against the dollar. The pair came under pressure as higher energy prices, wider US-German yield spreads, and Fed repricing supported the US dollar. At the same time, investors increased bets on European central bank rate hikes as inflation risks intensify. However, aggressive ECB pricing could become a risk for the euro if the central bank holds steady next month.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.